For decades, land in the Ozarks changed hands quietly, neighbor to neighbor, family to family, generational transfers that kept ownership local and communities stable. That's not what's happening now. Large parcels are consolidating. Lakefront is disappearing. Timber acreage is changing hands in transactions locals only discover months later when new no trespassing signs appear. And most locals don't know who's buying it. The names on deeds are limited liability companies registered in Delaware, Wyoming, and Nevada, states chosen specifically because they obscure actual ownership. The buyers don't attend community meetings. They don't introduce themselves at churches. Tonight, we're breaking down 20 disturbing truths about who's really behind the Ozark buying spree and what it means for the region's future. For decades, institutional capital ignored places like the Ozarks. The returns weren't exciting enough. The appreciation wasn't fast enough. That calculation has completely changed. In an era of inflation concerns and economic uncertainty, land is increasingly viewed as inflation protection, hard asset security, and a long-term hold strategy. Unlike stocks or bonds, land can't go to zero. It can't be hacked. It can't disappear in corporate bankruptcy. The Ozarks check every box institutional investors seek: water access, timber, recreational value, and lower acquisition costs than Tennessee or Colorado. Number 19. Limited liability company structures deliberately obscure who is actually buying. Institutional buyers do not announce themselves. They do not hold press conferences about their Ozark acquisitions. They buy through limited liability companies that obscure actual ownership. A local sees a property sold to Midwest Holdings Limited Liability Company and has no idea whether that entity represents a local investor, a timber company, a hedge fund, or a billionaire assembling a private retreat. The obscurity is deliberate. Capital moves most effectively when it moves quietly. By the time communities understand what is happening, the acquisitions are already complete. 18. Timber companies are quietly assembling massive holdings. Large timber firms are acquiring forest tracts that belonged to families for generations. The transactions seem ordinary. Retirement sales, inheritance divisions, families converting land to cash. But the buyers are not ordinary. They are institutional players executing long-term acquisition strategies. Timber is not just lumber waiting for harvest. It is a hedge against inflation. It is a renewable resource that replenishes itself. It is land that appreciates while simultaneously producing sellable product. The firms acquiring Ozark timber are not planning to clear-cut and exit. They are planning to hold for generations. 17. Ridge acreage that seems worthless holds hidden value. Ridge terrain that frustrates people trying to build actually enables tree growth that compounds year after year. What looks like unusable land to residential buyers is an appreciating asset to timber investors. Border parcels near protected zones carry premium value because adjacency to conservation land provides a buffer, privacy, and potential future access arrangements. If you own land that surrounds protected wilderness, you control access to that wilderness, even without owning the protected land directly. Sophisticated buyers see value where locals see obstacles. 16. Once land consolidates, it rarely returns to local markets. Here's what matters most for Ozark communities. Once land shifts into institutional ownership, it rarely returns to small owner markets. The families that sell cannot buy back at prices that result from institutional appreciation strategies. The fragmented ownership that characterized Ozark land for generations gives way to consolidated blocks that will remain consolidated. The pattern is one-directional, local to institutional, fragmented to consolidated, family to corporate, and the direction does not reverse. 15. Short-term rental investors are transforming lakefront communities. Lake cabins that once stayed in families for generations are now Airbnb portfolios assembled by investors who have never set foot in the Ozarks. They are multi-property LLC holdings, managed remotely through property management apps. They are out-of-state investments operated by people who view cabins as revenue-generating assets rather than places to gather. A lakefront cabin that might rent to a local family for $1,500 per month generates $500 per night during peak season. The economics explain why this transformation happens so quickly. 14. This isn't tourism anymore. It's structured acquisition. Investors buying Ozark Lake properties don't want to fish at dawn or watch grandchildren swim. They want cash flow, appreciation, and portfolio diversification. The lake is spreadsheet entry, not family memory. Once properties convert from family ownership to rental inventory, they rarely convert back. The economics do not support reversal. Communities that once consisted of neighbors who knew each other become collections of rental properties where occupants change weekly. If you are realizing the Ozarks are changing in ways you had not considered, subscribe to Hard Truth Untold. This channel exists to explain what is actually happening to places people love, not just what marketing wants you to believe. Hit subscribe. There is more ahead. 13. Illinois retirees are arriving with cash local buyers can't match. Illinois retirees sell their Chicago area homes, which appreciated for decades, and arrive in the Ozarks with cash that buys lakefront property outright. They do not need mortgages, which means they do not need appraisals. They do not wait for financing approval. They close quickly when competition requires speed. Cash buyers bidding against financed buyers win consistently. The young couple hoping to buy their first lake property loses to the retired couple paying cash from their Illinois home sale. 12. California and Colorado refugees find their money goes further here. Texas. Retirees convert suburban Dallas equity into Ozark acreage that would have been unthinkable at Texas prices. Retirement savings stretch dramatically further in Missouri. These buyers change markets fast. When money from coastal markets competes for Ozark property, prices adjust to what outside buyers can pay, not what local wages support. Their arrival changes what affordable means. Permanently. 11. Water access is becoming a premium investment category. The springs, rivers, and lakes that define Ozark geography represent resources that cannot be manufactured. As other regions face water scarcity, Ozark water access becomes increasingly valuable. Institutional investors recognize this value, even when locals take it for granted. Properties with water rights, spring access, or significant lakefront carry premiums that will only increase as water scarcity worsens elsewhere. What seems like ordinary Ozark geography looks like a strategic asset to sophisticated buyers. 10. Recreational value attracts multiple revenue streams. Hunting leases, fishing access, tourism potential. The Ozarks offer multiple revenue streams beyond simple ownership. A single large parcel might generate income from timber harvest, hunting lease arrangements, camping permits, and eventual appreciation upon sale. Patient investors calculate returns across all these streams simultaneously. The land is not just land to them, it is a diversified revenue platform. 9. The Ozarks are being compared to Tennessee and winning on price. Tennessee land has already been discovered by institutional buyers. Prices reflect that discovery. Colorado is priced beyond reach for most investment strategies. The Ozarks offer similar characteristics: scenic beauty, water access, timber resources, and recreational value, and yet they remain undervalued. Sophisticated investors see the gap between current prices and comparable regions. They are buying before that gap closes. Section 8. Social fabric dissolves when owners become strangers. Communities governed by resident owners may differ dramatically from communities where residents are tenants and owners are absent. The informal agreements that made lakefront communities function, such as shared maintenance, mutual support, and collective problem-solving dissolve when most property owners do not actually live there. Absentee owners have different priorities than resident owners. They optimize for investment returns rather than community outcomes. 7. Local control shrinks as ownership consolidates. The decisions affecting communities, what gets built, what gets preserved, what gets developed, increasingly get made by people who do not live in those communities. When ownership concentrates in institutional hands, political dynamics shift. The people making decisions about land use, development, and community character may have no stake in community outcomes beyond financial return. 6. Housing inventory tightens as properties leave the market. Properties held by institutional investors or out-of-state owners do not appear on the market the way family-owned properties do. Families sell when life circumstances change, like death, divorce, or relocation. By contrast, institutional owners sell only when investment timelines complete, and that may be never. The available inventory for local buyers shrinks as more properties move into long-term institutional holdings. Young families hoping to buy their first Ozark property face competition from capital pools they cannot match. The affordable entry point that allowed previous generations to establish themselves, the modest acreage, fixer-upper cabins, and starter properties, disappears as prices adjust to outside buyer capabilities. Ownership becomes something inherited rather than something achieved through work and saving. 4. Political dynamics shift with ownership patterns. Voters who own property have different interests than voters who rent. Residents have different interests than absentee owners who cannot vote locally but can influence through economic power. As ownership patterns change, the political calculations change. The community that votes may not match the community that owns, and ownership often matters more than voting for long-term outcomes. 3. The Ozarks aren't being invaded, they're being evaluated. This isn't a story with clear villains and victims. The buyers aren't hostile forces attacking communities. The Ozarks are being evaluated by capital seeking returns. They're being discovered by investors who finally recognize what locals always knew. This region holds value that hasn't been fully priced. Capital always moves toward undervalued assets. That's not malice. That's market logic. The transformation is already well underway. This is not a future threat to prepare for. It is a current reality to recognize. The deed records are changing. Names that appeared on Ozark land for generations are disappearing. Limited liability companies with obscure origins are replacing them. By the time most locals understand what is happening, significant portions of the transformation will be complete. 1. The visual Ozarks hide the ownership Ozarks. The Ozarks still look the same from the road. Same hills rolling toward horizons. Same trees covering ridges. Same water filling lakes. The visual continuity suggests nothing has changed. Deed records tell a different story. Ownership patterns that kept land local for a century are giving way to patterns connecting Ozark parcels to capital sources in New York, Chicago, Dallas, and beyond. And once land shifts into consolidated ownership, it rarely shifts back. The economic logic runs one direction. What's happening cannot easily be undone. Are you seeing this shift where you live? Have properties near you sold to buyers nobody recognizes? Have rental cabins replaced family homes? Have no trespassing signs appeared on roads that used to welcome neighbors? Drop your observations in the comments. Tell me which truth surprised you most, or which one you have already experienced firsthand. And if you want more breakdowns of the ownership patterns reshaping Missouri, analysis that follows the money rather than the marketing, subscribe to Hard Truth Untold. Because the Ozarks are changing, and understanding who is driving that change matters more than most people realize.